That's right. So we've had we finalized an acquisition of an oil field with BP, Magnus, in the last quarter, and we did an equity raise to do that. We added 75%. We had originally had the first 25%. That was driven by a reduction of costs in the field from about $50 a barrel to around 25, and from an operating cost perspective, which allowed us to add more reserves, but also allowed us to exercise the option slightly early.
Just let me just go back, just listen to what you just said. $25 a barrel is your cost per barrel, yeah?
This is for this particular field, and actually that's the average for our fields.
That is a fantastic cost per barrel for quite an old field, isn't it?
That is correct. It's actually quite an exciting field because there's still a lot of reserves there. It's about 50% recovery.
I don't want to get too geeky, but how much are we talking about?
It's 2 billion barrels.
2 billion barrels. So it's a very significant amount of oil still.
That's correct. Oil and gas.
What kind of support are you getting from the British government? I mean, to be honest, I'll tell you now, I spoke to an employer earlier this week who's got, what has he got, 50,000 employees in the United Kingdom. It's a German businessman, hasn't spoken once to the government. They don't want to speak to him. Are they actually bothering to speak to people like you?
Well, I think they're obviously very busy with Brexit.
Yeah, some say they're not doing their day job.
That's all-encompassing. I mean, I think they have put measures in place a few years ago to assist the industry. There's very few taxpayers at these prices in the UK. The tax receipts have gone down from about 15 billion to about £1.5 billion last year, pounds. And so, honestly, there's very little that they could help with at present.
Some of the broking reports haven't been that helpful for you, have they? And I think RBC put out a piece and then later came out and updated what they'd written, but they were talking about potential covenant breaches, I think, in the original note here. That's not useful for you, but it does, of course, focus questions back on your debt and your ability to continue servicing that debt.
Yeah, so we have two pieces of debt. One is a corporate facility, which was $1.2 billion. That's reduced. We have said to about 800 million drawn, so we've reduced that quite significantly. We have another 200 million to pay this year, reducing that even further. And then the other piece of our debt is a bond, is an institutional and retail bond, which has a duration of just under 5 years, October 2023. That one is linked to oil prices because we only pay interest in cash if oil prices are above 65. We've had more liquidity at the end of the year than last year and the year before. The liquidity situation is very good. I mean, RBC came out and apologized, and they said they made a mistake there because we have plenty of headroom for
and just, I mean, obviously some of this servicing will be related to production targets. What would you say your level of confidence is that you're going to meet those targets? Because as we know, there's always an element of the unknown around this.
So we've slightly exceeded targets last year. I think we've talked about being above the mid-range, which was 54. This year, we have also highlighted another 20% increase in production from about 55 to 67 range. So I think, and this has all been organic when we started the company, 67,000 barrels a day. Our consensus EBITDA for last year was around 750 to 800 million dollars. So we have a significant amount of cash flow, even considering our debt. Our net debt to EBITDA ratio will be significantly down at the end of the year.
The Norwegians spent their money on saving. The Brits wasted their money on all kinds of things from the North Sea as well. Is there a golden era that could happen again, or at least a bronze era for the North Sea? I mean, you mentioned 2 billion barrels at Magnus as well, which sounds very encouraging as well.
That's in place.
As a lot of the bigger North Sea oil fields players have pulled out and they've left it for the likes of you as well. Could there be a resurgence of North Sea energy, or is that just too much to hope for?
No, I think if you follow the smart money, private equity has become a big player in the North Sea, and they have traditionally made very good returns in the 20s plus in oil and gas. So I think we're seeing several players that have taken assets, private equity. We've seen several private companies also come in. So I do think that we are looking at a different structure in the North Sea going forward.
Okay, and Brexit, sorry, I know we've been there very briefly. Does it matter at all to you?
So obviously oil is a international commodity, it's fungible, so the price is not related necessarily to the UK. There are some issues with the supply chain, where the supply chain in Europe is very linked to the UK now. So I would say probably 20% of our supply chain, and we procure about $1 billion worth of equipment a year. I'd say 20% of it would be affected, but it's we have a backup plan to handle that.